Hello and welcome at Stocks Advisor channel. Here we are looking for interesting buy opportunities for US-based stocks. Today we will talk about Exact Science Corporation, traded at Nasdaq, ticker name EXAS. Well, Exact Sciences actually was forming very specific candle combination last trading week. We can see that actually prior to the earning reports, the price expectation actually the expectation was quite high, and indeed the price really went up here, and also classically it was a standard rebounds from moving average 20 on upwards channel, so it was like a double wave going in the boost mode. But then what we saw, because the earnings report actually expectations for Q3 were missed, and instead of having EPS loss about minus 50 cent per share, the actual one was more than $1.5 loss per share, and therefore the price of course started to correct. Seemingly it's still trying to kind of form a U shape here. We can see it's nicely volatile and kind of trying to recover. Still a lot of battles ongoing. And what is nice to note here that first of all, a lot of volume was traded at that moment and during this big spike, also sending price very high RSI wise. But overall, the moving after the decline, the moving average 20, it's actually a very rare situation. Moving average 20 is going in deceleration mode, so it's still positive. It's going up, but it's kind of trying to bend. It could be still fake band, but it is. And moving average 50 is going upwards with acceleration, so it's going like that. So it's not only going upwards, but its second derivative is also bigger than zero, so it's going with acceleration. Similar is true for moving average 200, also slightly going with acceleration. And by the way, here we have three moving averages depicted on the left. You see their captions. Coming back to the analysis, actually, what we can expect here, we can expect a momentarily spike, probably finishing the formation of U shape, but overall, giving the earning reports news, giving the beating negatively, actually, or missing expectation and beating it negatively. Even if this spike takes place, some more severe correction is expected here. And overall, if you're already in position and started somewhere, let's say from below 120, maybe you can still wait to try to catch the spike, but overall it would be quite dangerous for this stock, because also it's more bearish from a technical point of view. And one of the parameters is that RSI is kind of, after being long-term overbought and making this spike, and also missing the earning reports expectation, is kind of trying to bend down here, you can see. And actually MACD, which is really working in this case as a good indication, it finished its negative wave, went upwards with the spike here exactly, and now it's trying to go down. So it will try, it might still bounce back, but then we should have some solid news. And if not, also it's important to see that overall MACD curves, not only histogram, are quite high. So overall, we still need to go down to create this positive pressure here. And this is more bearish indication. So having said that, it's still not too bearish. It's just slight reconfirmation of moving average 20, because it's still a stock making so-called 20, 50 to 100 shape. So its moving averages are aligned like that, meaning longer midterm it's positive, but some correction might take place. And if correction is going to take place here, of course, the first level of support is here, and then the second level would be exactly on this, about 100. Yeah, okay, there is also another one, but of course, it's not given we go that low. Here also, just to draw it because it's on the chart. And another support line is actually moving average 20 here. If we would imaginarily continue, that would be the first point to enter. And with this, you can call the lines S1, S2, and S3 here. So what we can do when the price will go for correction, if it's going to correct, the first entry would be advised actually below moving average 20 and towards S1 line. And still, because this stock is very volatile these days, you should keep in mind a more severe correction. So that one will take place in the second defense line, which will be actually at the moving average 50. This line coming upwards here. So if you would imaginally continue it, it will be somewhere at that vicinity of moving average 50 and actually S2. So combination of these two will work as a double support here. Again, it's not given that it will go down. It still might go upwards, but then it will be non-technically move, because that's also important to understand. What we do at our channel is a technical analysis. It doesn't mean that price will go down. It of course can go higher, but this will be non-technical. So this is important. So this is non-technical, and it could be news-based, expectation-based, whatever, going beast mode. But technicality here is more bearish, so correction should take place, and we need to touch a little bit moving average 20, and then either to reconfirm the trend or to bend lower. And with this, you know, the entry levels, and it's advised to average down and buy with 1 to 2 strategy. So buy with 1 portion, average down with 2 portions. And should the price restart from the first circle, then you can sell at around between 125, 130. Should it restart from the second circle, then the sell would be advised at about 110. And this is it for Exact Sciences Corporation. Very volatile though, and still could make some sudden moves, but again technically more bearish than bullish, and to be very careful with average down, not to be too greedy and too fast with buying with all money. Otherwise some losses can be seen here as well. So with this, that's all for current episode. Please don't forget to subscribe to our channel. You will not miss this way new videos, new interesting discussions that will come in next episodes at Stocks Advisor channel.